Hi, I'm John Prasinos, Editorial Director of Investing Daily with a video update for Monday, December 28. I trust you all had an enjoyable holiday. The Yuletide shortened week brought a mixed close to stocks as Wall Street weighed the alarming resurgence of coronavirus in the U.S. with the approval in Congress of a long-stalled fiscal stimulus bill. President Trump threw an 11th-hour monkey wrench into the relief bill with a threatened veto. The president claims the bill doesn't do enough. It's my hunch the bill will eventually pass because it contains funding for vaccine distribution. But in this crazy political environment, it's risky business indeed trying to predict what's going to happen in Washington, so we'll see. Regardless, small cap and technology stocks last week continued their bull run, with both the Russell 2000 and NASDAQ indices finishing the week higher. As the following chart shows, the tech-heavy NASDAQ, has been on fire all year. Take a look. Tech stocks have been rising this year as quarantined consumers increasingly rely on technological services and products. The tailwinds for tech should continue in 2021, even when the pandemic finally starts to wane, because this reliance on tech is becoming entrenched. Weighing on the broader market is the emergence of a more virulent COVID strain in the United Kingdom. However, the UK also was a source of good news, with reports on Christmas Eve that interminable Brexit negotiations had finally given birth to a deal between Britain and the European Union. Here in the United States, even if Trump relents and signs the COVID relief package, the bill does nothing for states and localities. That could prove a huge problem for the incoming Biden administration. Because of the pandemic, cities throughout the country are in their worst fiscal shape since the Great Recession of 2008-2009. According to a new report from the National League of Cities, nearly 90% of city finance officers surveyed said their city will be less able to meet its financial needs in the fiscal year 2021 than in 2020. Take a look at the second graphic. Massive public sector layoffs are looming, further undermining an already weak labor market. States and localities face budgetary crises, but the federal government isn't coming to their assistance. Pink slips will soon be wending their way throughout the country to police officers, firefighters, teachers, sanitation workers, even healthcare providers on the front lines of the pandemic. The U.S. relief bill passed by Congress last week also falls short when compared to pandemic-induced stimulus implemented overseas. Although it comes in at a hefty $900 billion, the latest U.S. stimulus bill currently offers a much lower level of coronavirus financial aid and stimulus than other developed nations. See the third chart. However, amid these clouds, I see silver linings. As 2021 gets underway with a new Democratic regime in power, we'll likely see massive fiscal stimulus to meet pent-up national needs. Additional stimulus next year should provide long-term upward impetus for markets. Be sure to maintain a diversified portfolio. Not only diversified to different asset classes, but also to geographic regions and sectors. The ascendancy of consumerism, it's a global phenomenon. In the developing world, disposable incomes are rising in tandem with consumer sophistication. Emerging markets also have populations that are younger and hence freer spending than those in developed countries. Stimulus and a concomitant return to economic growth in early 2021 would be favorable for copper demand. The price of copper is poised to soar next year and beyond, which is great news for copper producers. For our favorite investment play on this crucial raw material, take a look at the article on the Investing Daily website that accompanies this video. Well, that does it for now. In the meantime, have a safe week and don't take any chances with this deadly virus. If you want to reach me, just send an email to mailbag@investingdaily.com. Thanks for watching.